welcome into today's video. And in today's video, we venture into the interesting world of investments. Now, we're going to cover the basics of different types of investments. I'll mention them in no particular order. One of the places where you can invest your money is in a money market fund. There are many companies that you're able to operate a money market fund through. There's CIC, there's Britam, there's Mali that is inclined to Safaricom, there's Old Mutual, just to mention a few. Because there are different companies offering that, you need to check on two things before you decide. Reliability, like the ease of opening the account, operating the account, how fast you can access your money just in case you need it, how prompt they respond to the challenges that you raise, and also how well they have adapted technology. We're in an era where we need to operate anything on the phone, so like I can make the deposit, I can withdraw my money, like it needs to be so convenient for you in matters of technology. You can also check if they have a portal online where you can see your money grow daily. By then the interests grow daily, so maybe there can be a portal whereby you can check like how was it today, what are my returns today, what did my money, at what rate did my money grow today. Also, you need to check on the returns, like the interest that they give per annum, like at what rate will be my money growing at after me depositing the money. The beauty of a money market fund is, as much as it's risky, it's not that risky. Like the money is not as risky in comparison to other types of investments. Because one, the money market funds, they're very conservative. They lend money to after pulling the funds from different clients, they lend money to very solid companies that have strong cash flows, and they do it short term. That's why if you need your money, you can get your money as soon as you request for it. The advantages of money market funds is, if you need your money, you'll get it in 2 to 3 working days upon request. And also, the interest rate that the money grows at is higher than the inflation rate of a country. So you're not only saving, you're also enjoying the interest, the growth. Like if your money is here, they compensate all the risk and they also give you the returns here. So money market fund is a place to go to, and you can start it with as little as 5,000 Kenyan shillings. And because this money grows daily, the often that you're able to deposit the money, the better for you, because growth here happens on a daily basis. The second kind of place where you can invest your money is on personal pension funds. This one is a long-term investment plan. It's basically a retirement plan. Now, yes, you not always have the energy to grind. And when you're old, make sure that you're not only asset rich, but you're also cash rich, so that you're able to run your day-to-day activities. You'll require some cash to do one thing here and there. Mind you, you also need to factor in that inflation will have taken place, so you need to invest your money whereby it won't be losing value. The beauty of a personal pension fund is you're guaranteed of capital reservations despite the economic times. And also because it's long-term, you need a long-term investment, so the interest rate might keep fluctuating, but you are guaranteed of your capital reservations. You can start it with as little as 1,000 Kenyan shillings. You just need to approach an insurance company and they offer this. You can run it alongside, even if you have NSSF. The money that you contribute money for your NSSF won't be enough to sustain you after your retirement. So you can do this on the side to supplement it, to make sure that you are on the safe side. The third place where you can invest your money is in a stock market. This is basically buying of shares. Now here, you go through a brokerage firm which will do the transactions on your behalf. And it's so easy because you can do it with as low as 5,000 Kenyan shillings, because come to think of their shares that will go at around 30 Kenyan shillings per share. The requirement is, per trade, the least amount of shares you can buy is 100 shares. So that's 100 by 30, that's 3,000 Kenyan shillings. You'll pay the brokerage firms, they charge a percentage of the trade that you've done. So say they charge 2% of the 3,000 Kenyan shillings. So that's the total amount of money you will require to make one trade. And from there henceforth, you can be buying as long as you never buy less than 100 shares per trade. Here, the only thing you need to check, when you need to assess the companies that you're investing in, you need to assess its financial health evaluate, check the patterns of the operations of the company. And companies like telecommunications, energy companies, they will rarely fail you. And you see, you can operate this with as low as 5,000 Kenya shillings. And as long as the company makes interest, you are beneficiary. This is a passive income. You're not working in that company, but you're benefiting from the profits that this company is making. The fourth place where you can invest your money is in equity funds. This is where you approach a funds manager. The funds manager will pull your resources and will do transactions on your behalf at the Nairobi Stock Exchange. You see, at this point, maybe you're new in this game. You don't know how to go about at the Nairobi Stock Exchange, and maybe you're also avoiding the hassle. So for a beginner, as you learn along the way, you can approach the funds manager and they can do the transactions on your behalf. And here, you only need to have proper shock absorbers, because if the company that the money is invested in incurs losses, then those are your losses. If it incurs benefits, those are your benefits. But you need not panic, because stocks are known to give returns, but you need not panic. Not when you see that there are losses being incurred by this company, then you panic and withdraw. At that point, you withdraw at a loss. But if you have enough shock absorbers and you're patient enough to let it grow, you'll withdraw the money when it has given you the advantages of the interest. And also here, you need to know that there's advantage of you can withdraw your money between 2 to 4 days. But now, when, like, your timing on when you withdraw the money will matter whether you withdraw at a loss or at a gain. The last but not the least, you can invest with the government, and here you'll go for treasury bills or bonds. All what you need to operate here is a CDS account, and a CDS account is free to open. You just go to the central bank, get the forms, and you fill them in. Don't allow the bank to be your broker. Make sure you get the full advantage. And in our treasury bills and bonds, you can decide to go for the bills or the bonds. The bonds are long term. It's between 2 to 30 years. Often the interest rates are double digits, and you can start with a minimum of 50,000 Kenyan shillings. So if you have some 50,000 Kenyan shilling lying down, and you don't have an immediate plan with it, then going for bonds will be one of the best options. Alternatively, you can go for bills. Bills are short-term investments between 3 months, 6 months, a maximum of 1 year. The interest rate currently are at a single digit, but are higher than some of the money market funds. So this is somewhere you can venture your money short-term. You'll start with as little as 100,000 Kenyan shillings. It is free to open a CDS account. You really don't need a broker. It's not so difficult to operate this. At the end of this, I hope we don't have money. After listening to all this, I hope we don't continue to allow money lying free, like idle, more so in a current account. Because in a current account, your money is subjected to inflation, and also the monthly ledger fee that you're being charged. So you're incurring losses, like you're being charged for somebody to give you money, and also it's being exposed to inflation. So clearly you're losing. So don't let your money lie idle. You can go to those things that we've seen where you can withdraw your money between 2 to 3 working days. Remember that investment is a journey. It's not a sprint. So be patient and research very well before you make any investment decision. And clearly, in the end, you'll reap the benefits, because the biggest benefit that you always find with investments, it's its compounding effect, which requires a lot of patience. Thank you for watching. See you in the next video.